Hello, this is Jordan. This video is being recorded on the evening of Tuesday, January 9th, 2024. Thank you so much for tuning in. And in this video, I'm just going to go over the three major errors that are being made in terms of technical analysis with respect to silver. Now, I've covered these three in past videos, so to some of you, this may seem like I'm just repeating old insights and old analysis, but I wanted to put them all in the same video, update it all, and maybe for the more relatively new people to the channel, it will be more informative. But anyway, let's get into it. So the first is that there is no cup and handle in silver. Okay, there's a cup and handle pattern in gold. We can clearly see that here. This is the cup, this is the handle. It looks like gold is probably going to break out, hopefully break away to the upside at some point this year. But this is a pure cup and handle right here. And again, this is what a cup and handle looks like. The retracement is really the key on the handle. You have the cup, and then the handle should not retrace more than 50%. Really, I mean, it really shouldn't retrace more than 38%. I mean, there are some instances where it can retrace half of the rebound back to the high, but you like it to be around the 38% level. Other than 1 or 2 weeks here, gold this retracement handle, it's held above the 38% the entire time, other than 1 or 2 weeks here. So this is I've mentioned it before. This is a pure cup and handle. It's actually a stronger than normal pattern. But anyway, here's silver. So you have this giant cup here, and silver hasn't even rallied back. You know, if this is the handle, it hasn't even rallied back to 50 yet. It's really struggling. But the main point here, and this blue line's a 38% retracement, this blue line's a 50% retracement. The main problem is if silver were in a cup and handle, you would have seen after, so this is the cup here, it rallies back, 2011 peak. So the handle should have been going like this. It should have been holding above 26, if not wherever this is 32. So really in a strong pattern, it would have held above 32, but at worst, it needs to hold above 26. So it came real below, busted here. So this is not a cup and handle pattern anymore. I don't care if it looks like it. It's not meeting the criteria. And that's why it's taking so damn long for silver to get back to 50. And I mean, this is kind of what it looks like here. You know, this is a cup and handle. This is what it typically looks like, and this is silver. Too much of a decline here, and it's taking way too long to get back here. So this is not a cup and handle pattern. Now, that being said, if and when silver rallies back to 50, this is going to be a super bullish pattern because you have this huge base here, and you know all this energy is being built up if it can get back to 50, and it's going to set the stage for some spectacular moves in the coming years. You know, maybe not the next 1 or 2 years, but I'm talking about breaking 50. But eventually that's coming at some point. And by the way, when this rallies back to 50, I think that's when you'll actually see, like this will be a cup when it rallies back to 50, and you'll get kind of a tighter consolidation here, which will actually look like a handle. So this is actually the cup and handle pattern that you'll get, but the cup hasn't even formed yet. So I don't mean to get too technical on it, but people, I've said this before, you can't always go by looks, okay? These patterns, there's specific ingredients and criteria that make these patterns. And silver is not a cup and handle, okay? But again, if it rallies back to 50, it's super bullish anyway. But it's not a cup and handle right now. That's why it's taking forever for it to get back to 50. Next, there's no bull flag in silver. I mean, this is what a bull flag pattern look. You get a huge move up, and then you get a really bullish consolidation where, again, it holds above the 38% retracement, or it doesn't go below. So bull flags tend to look like one of these two. You get the big move up, then you get this really bullish consolidation. It holds the majority of the gains. That's the key. Here's the potential for the flag here. What happened? It's busted. It started to it's busted. There's no bull flag here. And again, that's why it's taking so long. I mean, it's taking so long for it just to get back to 28, 29, or even break 26, which I'll get into. If silver were in a bull flag, it would have held above this. This is a 38% retracement. Like this, it was a bull flag here because it was holding above the 38% retracement, but it lost it here, it lost it. So this is not a bull flag anymore. Okay, it's simple, not a bull flag. Now if and when silver rallies back, it breaks 26, it rallies back to 28, 29. I mean, this pattern will be bullish, but that doesn't make it a bull flag. So it's not a bull flag. Last thing, and there's no specific, I mean, it's just a general error, but just these trend lines. I mean, I see this all the time from numerous. I'm not picking on anybody, but so you have this downtrend here, but this is not. This downtrend is over. That started here. Like this is over. This was the downtrend. It's over. Silver's basically had to move up. I'll get into it in the next thing, but 26 is really the key. But when you're going to use trend lines, you really need to see. You want to see at least 4 or 5 points being touched, because any two lines automatically connect. So that's not a trend. So if you're connecting 3 points, that's really only 1 point, in addition to the normal connection of any 2 points, which is a line. So you need to see beyond 3 or 4 connections. Now it's best to use closing lines. So this is how I'm drawing it. You look at this first line here. So you have this, that's 3, that's 4, but look what's happened. You had a breakout here, it failed. Testing the line, breakout, it failed. So this action is really telling you this is not. I mean, this is not. I don't know how to describe it, but it's just not. It's really not viable, because you have so many breakouts and fake outs. It's just not viable. Now, connecting this point here, that's 1, 2, 3. Maybe it might be viable, but it's just really not, in my opinion. And this is too much. There's too much here with no touching. I mean, 2011. This is 9 years with no touching, and so again, what's going on here is no longer related to this downtrend. So that's the other problem with trend lines. Especially diagonals. You have to really be careful about what you connect, because it's easy to just, we could connect this here and this is a triangle. No, it doesn't work like that. You have to carefully watch the market and see where points, see which prices are really connecting. Now, this is a monthly candle chart, and candles can convey so much information. And now, you don't really want to draw these diagonals on candle charts, but you can see how this is a problem. Going back to what I already said about, there's no breakout here. Well, it's hasn't broken out. So it just, again, the diagonal line doesn't make a lot of sense. So I know I'm belaboring the point. I apologize for babbling on here, but 26 is the key. Okay, this is the key. You go back to the last 2 years. 26 or the high 25s. Just look at this action. Failed here. Tested it. Couldn't close up. Same thing here. Got up. Couldn't close above it. Traded above it. Closed way below it. Here you got pretty close to 26. You had this big. When was that? So this is January, December, end of November. You had this great close at 26. Goes right back down. So this is the key level. Excuse me, 26. This is the key resistance, not this diagonal line. So again, I'm belaboring the point, but that's an error. This is the key level in silver. When you get a month, and you can see this on the weekly, monthly, and quarterly chart, even the yearly chart. So 26 is the key level that has to be taken out. Okay, that's all in this video. I'm sorry for babbling on here. I don't mean to sound arrogant about this stuff. It's just when looking at the market and doing technical analysis, you have to understand the criteria of that make up these patterns. You can't just go 100% by looks. I mean, there's no cup and handle. It's not playing out. There's no bull flag. It's not, it hasn't been playing out. And, the trend line. We've allegedly had, 2, 3, you see the charts onto it, break out above the downtrend's over. And that's why these things are just incorrect analysis, and that's why they're not playing out. Again, I can't emphasize this enough. I know this is annoying, but this is the level that silver has to break. Weekly, monthly, quarterly close above 26. All this other stuff just doesn't matter right now. Let me know what you think. Leave a comment. Thank you so much for tuning in. Talk to you guys again in the next video.